Good morning, Jags. This is Fahad. Today is Tuesday, June 16th. Let's get started. What's up? Everybody doing well?
Doing good. How are you?
Doing well. Great.
Good, good. Okay. Um, so interesting stuff happened overnight. I shared some of that stuff in Telegram. Right after market closed, or a couple of hours after that, the news came out that the Trump is considering $1 trillion stimulus for infrastructure. And if you look at the equity market futures, that was the time the market had a big bounce. Actually, it was right around here. These are the S&P futures. It was around, I don't know, midnight or something, or 11 o'clock. And then soon after that, the BOJ meeting happened, and BOJ gave the market another stimulus. So first, talking about the stimulus, there is this Bloomberg headline that this $1 trillion stimulus is going to be targeted, particularly for push towards building bridges, roads, and such. Now, this is only a draft plan and absolutely nothing else. Basically, if you think about this, this has been in the news for quite some time, possibly for the last 2 to 3 years. It has been rehashed several times, the same news over and over again. Now, what's likely to happen is that this is what the White House wants. The House, the Democrats have their own version, and then the Republicans want something else. The House Democrats, they want something to go for the states that have seen their tax receipts completely fall apart during COVID. So they want that piece also in this third bill. And then the Senate has its own priorities. So there's all this is going to get mixed into. All this is going to get mixed into a big giant bill. We don't even know the size of it. It could be anywhere really from $1 to $3 trillion. And then final version is supposed to come out sometime before July 4th, which is really only a couple of weeks away, 2 to 3 weeks away. And then they would like to sign it before the Independence Day. Now, when this news came out, the S&P futures had a sharp rally in overnight session. And just to reflect upon this, in hindsight, I wish I had actually gone back into the trade idea that I recommended in webinar just a couple of weeks ago. So for those who do not know, on January 4th, when we did the webinar, this is exactly what we discussed. We discussed when we recommended buying USCR, US concrete call options. And I also give a big bullish view on MLM, Marietta, however you say the name, and then VMC. Yeah, and VMC on this very prospect that this infrastructure bill will be coming, and we recommended buying USCR August 27.5 calls for 310. But then we had a big rally in the market because of the job report that came out on Friday, a couple of days later. So USCR jumped sharply. So I had 60-70% gain on that position. So I said, you know what, I'm not going to sit here and I'm just going to take my profits and then look for another pullback before getting back in. And I told the clients the same thing, and it was a good call. And then the stock retraced, but now it feels like that I'm going to miss the move that's today. I should have gotten back into USCR call options. So the stock closed yesterday at 23.11. It's going to open at 27. So $4 move on a $23 stock, is a 17% move in pre-market. And anybody still positioned in those call options or took a shot at it again on the pullback would make an absolute killing. 17% move is pretty high. And then similarly, if you look at MLM, which closed yesterday at 199, it's going to open at 215. So $15 move, or about 8-9% move there. And VMC closed at 113, and it's going to open around 122. So we're going to get some big, thick candles on all these positions. And so we need to see, I don't want to chase any of these. They're going to open around 8, 9, 10%. USCR was a high beta trade. That's why I went with that. originally, and that's going to open up 17%. So I'm not going to be chasing any of them. But if they do pull back once again, even to make a higher low, then I think I might be interested to go back into these call options. But unfortunately, missed this trade, even though I called a shot for it just less than 2 weeks ago. So there's that. Now we're going to be keeping an eye on it because there's a lot of detail in this bill um, that are going to be scratched out, redefined, and we don't even know what the final bill will looks like by July 4th. So there's going to be some movement, not only in these stocks, but many other stocks that we haven't even thought about yet based on what's going to be in the bill. Supposedly, there is a large section of this bill will be dedicated towards building out broadband in the rural areas in the country. So that gets into the tech space. And so we can find some plays there. So we need to keep an eye on that. But just something to keep in mind, this will be in play today. If you want to know what's going to move the market the most today, it will be this. By the way, the retail sales, May retail sales just came out and the S&P is ripping higher yet again, another leg higher intraday. Now Dow is up 750 points. NASDAQ up 173, S&P up 70 points, and Russell 2000 up 3.6% or 50 points. So the May advanced retail sales month over month compared to April increased by 17.7%, huge, versus April versus expectation of 8.4% growth. And if you exclude autos, then May sales sequentially month over month increased by 12.4% versus just 5.5% consensus. So this is showing a huge rebound in the U.S. retail sales in the month of May versus April. So S&P just took another leg higher. This is telling me from the biggest picture standpoint that that's going to put a bid in a lot of small and mid cap stocks. So that's positive for the Russell 2000 index, and deservedly it is higher the most than others, so it's up 3.4%. The second piece that came out overnight was the as you all saw in the first read that Chronicle published earlier today, was what the BOJ did overnight session. So Bank of Japan voted 8-1 to leave short-term interest rates at 0.1%, which is not a surprise. But the most important thing was that the central bank's special financing program is now increased from 75 trillion yen to 110 trillion yen on the back of government's second stimulus plan. So it's not usual to see Nikkei jump more than 4% in overnight session. We had a huge rally in Nikkei overnight. I think that NK, I don't even know what is a symbol, but there's a symbol for the Nikkei futures. But we had a huge rally in Japan, and so definitely that had a positive impact on the U.S. equity futures as well. So my thing is that I'm going to be watching the most is going to be how some of these construction or aggregates stocks are going to react to this stimulus package, because if they start to pull back intraday at all for any reason, I think there may still be an opportunity to get in. The next one I want to discuss real quick is really just the casinos. Watching Las Vegas Sands, that has pulled back to a trend support. Let me redraw my lines, but I showed this chart in the chat room late Friday when we saw July 50 calls were bought aggressively into the weekend. And Las Vegas Sands has a classic look of a higher highs and higher lows as it basically trades in this channel, and it closed just under 50 yesterday. And if it starts to take another leg higher from here, the natural room for stock to run is all the way to $57 in shares. So that's nearly 15% to the upside that we can have. Even if it opens around 50, not materially above 50 with the market rallying, I think there's still ample of opportunity to bank some money using trading call options up to 57. Now, we had a huge call buyer in Las Vegas Sands in July 50 calls. Over 13,000 contracts were bought on Friday. And two pieces of news that are worth mentioning. Last night, when all of us were done with the market had closed, there was a vote by the Nevada Gaming Board. And the vote was about whether they should make masks optional or mandatory for the guests that have started to arrive for the in all of these casinos that have opened up. And turned out they decided that we're just going to make them optional for these casino guests. Now imagine for a moment if they had basically made these. There's only headline. There's not much to read in this one. I'm sure there's a full article somewhere. But if they had made this mandatory, I don't know how these casinos would have looked like. So people want to have fun. It's a leisure place to go to. But anyways, they did not make it mandatory. So there's a little bit of a spark in pre-market in all of these casinos. Wynn is going to guided high by $4. Las Vegas Sands is guided high by about $2 and such. Let's see if we can catch some of this move, because I think it's going to, especially the Russell 2000 index is going to power higher like it is for more than 3.7%. Then these casinos are going to catch a lot of their wind. And I think Vegas easily gets above 55. And then we'll see if it's going to be able to cross all this heavy VOP resistance that comes in between 55 and 57. Another thing I can mention is that um, according to Bank of America credit and debit card spend, which is a channel check we look at, because Bank of America debit and credit card spend touches about 10% of all US consumers. So it becomes a pretty good proxy. That came out yesterday. They said that that Las Vegas Sands is slightly recovering. It's not significant, but definitely it's there. The visits to retail and recreational places are at 25% for the week of June 6th compared to the pre-COVID-19 level. So if you think about this, that we have already basically, we have made some recovery. We're still down 75% essentially in terms of the total spending on the strip using Bank of America debit and credit card. But so long way to go before reaching the pre-COVID, but it's definitely better than 0%, right? So spending is recovering, but slowly, and the sequential improvement should continue in more time to come. And similarly, China and Macau are also showing some signs of easing, but those data points are so bad. I mean, if you look at where the Macau gaming has gone, it was down 90%, 85%, something like that. And so there's recovery, but it's going to be slow there as well. Two things I can tell you um, real quick about Macau. The Didi rides, which is similar to Uber rides in the United States or Lyft, the Didi rides were 95% of the normal, according to the latest channel checks that came out for the week ending June 6th. So that's a huge improvement, which means more people are going around in Macau. Also, we're seeing small signs of local policy easing in Macau. So Macau is allowing, for example, the local residents with business or practical travel needs, but not tourists, to apply for exemptions from quarantine when entering Zhuhai province. So special exemptions are being provided to improve traffic. And separately, a special ferry service is now running between Macau and Hong Kong International Airport. It's being set up actually this week for the local residents, so it will become functional starting from this weekend. And so who knows, that may also have some meaningful impact on the total number of visitors coming from outside regions into Macau with this ferry being set up. So these are stocks, they pull back significantly when the market crashed last week on Thursday. Remember that? And so we need to watch this. If Macau starts to show continuous sequential improvement with all of these policy measures being taken, and if Vegas is seeing higher spending on the street, retail and recreation, plus mask is no longer a problem, then I think there's reason to believe, as long as COVID-19 cases are not going up, I think these stocks are going to run. Las Vegas Sands and Wynn in particular, those two will naturally remain my favorite. So that's all I wanted to share. aside from what's going on in the construction space, VMC, USCR, and MLM. Avo, what's up?
I was looking at a couple of stocks yesterday. First one was the one that I can never pronounce, but I've been told it's Ichi, IQ. Now
Yeah.
this morning there was news that Tencent, I think, is looking to take a 56% or a big stake in it. So that was one that, well, maybe it's
Wow.
still valid to to keep going. It's up 30%. And the other one was Bilibili, which saw a good deal of July call buying yesterday. You know, there was 27 some odd thousand contracts traded in July, 45 calls, 17,000 of which are in open interest. So there was also a lot of day trading in there. You know, Billy, I've been watching for a while, and I thought, you know, getting close to a breakout here because it's been resilient regardless of the whatever was going on, including delisting talks of Chinese stocks. Whereas IQ has that muddy waters short note, or is it Citron, one of the two. Not that it matters at this point, really. So, I mean, the stock is up this morning. It's, but you know, when I wake up, this is what I have, and by the time I get to the computer, it's sometimes a little late for me to change and look for something else. But I think it still could run. Just their segment, they operate in 4 segments, and the largest segment that they have is mobile games, which has seen increases. And then the second largest is value-added services, and then they've got some advertising and e-commerce, which are the 2 smaller. E-commerce is actually the smallest segment of them all. So the gaming segment is benefiting from people gaming, maybe less and less if more things are opening up. So for now, I think it could still run, but I wish it hadn't gone up this much this morning.
Well, I was reading a note. Unfortunately, I don't have it in front of me, but I can share it in the chat from later. But I was reading a note um, about the Chinese e-commerce last night, and it was talking about how the smaller players, this is boom time for them in China, and um, they have been so positively impacted with accelerating e-commerce penetration in China, even in some cases taking market share from the bigger rivals, which is Alibaba, for example, and JD. But the entire space is just so, you know, the e-commerce penetration is now already at 25% in China. It was only single digits, or at least for the recent months during the shutdown period. And I think if it stays there, then I think there's a lot of forward-looking estimates that are still way too low for a lot of these e-commerce companies in China.
And I
Because
think there's a large enough population base that hasn't gone on to e-commerce platforms that there's probably enough for everyone.
Yeah, I mean, I guess we could have made a play on a lot of these Chinese companies, but I just simply went Alibaba because it's the safest one of all, and naturally it's going to be the beneficiary. So we're going to get that move that I was hoping we're going to get today. That's why I closed a short leg yesterday. So you can see it's going to gap higher by $5, close at 217, and going to open at 222. We were short the June 225 calls against our August 225 calls, but I bought them back yesterday. So it's going to be a nice breakout in Alibaba, but it's really the entire space. JD, PDD, you know, here's PDD. Look at that powerful chart. JD had a nice big bullish engulfing candle yesterday. And frankly, I've said this before, a lot of things that come out from the White House is just a bark without a bite. Just like the news yesterday that all of us saw in the chat room where I discussed, where you know now they're starting to give to the U.S. semi stocks, semiconductors waivers to continue to sell equipment to Huawei after nonstop talking about Huawei as a national security threat. So what does that have? I mean, how did that happen? But anyways, so I think there's more room to run for all of these Chinese companies, especially when you think about that 25% of the entire retail sales in that country is now e-commerce versus only single digits just at the start of the year. That's a massive shift, massive, massive shift. All right, good stuff. Chronicle.
Morning, Fahad. In terms of specific stocks, I have nothing to add to what's already been said, but just want to touch on what I said last week about the market needing participation from institutional investors at some point, not just retail money. It now looks like we are starting to get that participation because Bank of America was out with a note regarding its global June fund manager survey. According to the data, June cash levels dropped 100 basis points to 4.7%, the biggest decline since 2009. And hedge fund net equity exposure has increased to 52% from 34%, the highest since mid 2018. So, long story short, the retail traders are no longer alone in buying the market.
Yeah, definitely the participation. Nothing like price action changing the views, as the saying goes in the market. Um, you know, Ultimately, performance anxiety gets to the point where people say, you know what, I gotta get on the ride, and that's how FOMO begins, the fear of missing out. I gotta get on the ride because everybody's making money except me. So I don't care. I can start small. I can start to dip in the toes, but this is a powerful, powerful moves happening every day, and I'm just sitting here missing out. So I gotta get on the ride, and that's how typically a lot of stuff happen. By the way, in today's first read, you mentioned Netflix. You just briefly touched upon this one. So this is another one that I'm going to be watching. So here's today's Netflix. Where did they go? Right here. I like this comment. Netflix paid member ads are tracking $9 to $12 million. Oh, not sorry, 9 to 12 million increase in mid-June, according to SunTrust. And the SunTrust is estimating that the second quarter paid member ads are tracking 9 to 12 million into mid-June, with the churn down slightly quarter over quarter sequentially versus 7.7 million consensus. That's a significant beat again. If you think about it, similar to the kind of magnitude of beat that we saw in the first quarter. So if these channel checks stay with the company all the way through the end of the quarter, one would expect another very strong performance and a quarter from Netflix when it reports earnings next time. I just wanted to bring this up real quick because this is another one of our favorite right now that we are long call options. So let's see if this finally start to get through 440. And if it does through 440, then I think we may be seeing 460 to 470 in short term. So one to watch. Good stuff. Jay?
Hey, Pod. Only stock on my watch list today is toy company Hasbro. HAS is the symbol on that one.
Yeah.
So Jefferies has a note today. They hosted the CEO, CFO at the NASDAQ London conference, and basically management set low expectations for Q2, and that's going to reflect your retail store and your studio shutdowns. But Jefferies believes that Hasbro is a second half story. One of the items that they highlighted was in their franchise brand segment, specifically Magic the Gathering, and more specifically MTG Arena, which apparently is expected to step up in the second half with a major July card pack release, a mobile app, and a launch in China via Tencent. And what I would say about Magic the Gathering is it's very cult-like, and if you were to go to Twitch during peak hours, you would see that Magic does get a fair amount of following. So it might seem silly to use a card game as a catalyst, but I would say Magic has been a constant performer for Hasbro for quite some time. And then lastly, they started talking about E1 or Entertainment One, which is a Canadian multinational company that Hasbro bought late last year. They closed on it in December. They bought it for $3.8 billion, which was their largest acquisition. Jefferies is assuming revenue synergies of about 250 to 300 million. But on the flip side, JP Morgan last week talked about E1 and how, from what they've seen with production studios and whatnot, for TV, film, they think it's going to take a couple quarters for E1 to catch up. So they think E1 is still going to be an overhang. And JP Morgan also pointed out, as you get into the second half, you have Frozen 2 and Star Wars, which you're going to be lapping, which is going to make your numbers obviously more difficult to beat. And then lastly, the one thing I would say is per Jaguar scan, if you take a look, there was a buyer of 500 January 95 puts for $12 way back in October. Well, those are still in open interest and are going for mid to high 20s right now. So it's a neutral view at this point. We just have to see what other checks we get as Q2 comes about in about over a month, and then we'll kind of see what the second half looks like.
It's a depressed name for certain. I think the it's not on anyone's radar either. This is where surprises can come from. Interesting one. We'll keep an eye on further channel checks as the quarter progresses, and we'll go from there. By the way, guys, there is another breaking news coming out that a new study, CNBC is reporting that a new study on steroid treatment for COVID-19 that showed reduction in deaths. So it seems to me that today is a day where you just want to throw headlines after headlines. First, the $1 trillion stimulus, then the BOJ, then the retail sales, and now there's a steroid treatment is available for COVID-19 that is showing reduction in deaths. So there you go. The S&P futures are up now 81 points. NASDAQ up 190. Dow up nearly 900 points, and crude oil is also rallying nicely now, up about 3.7%. All right, let's stop over here. Thank you, everybody, for joining. See you next time.